Yeah, I think in looking at the other outbreaks that have been sort of similar to coronavirus over the last 20 years, um, it is interesting. We've never had a positive market response. I guess that maybe that would be a little weird to have a positive market response when there's um, something like this going around. But um, yeah, so we've had Ebola, Zika, avian bird flu, SARS, all of those translated to a negative market reaction of more than 5% down until the issue had been resolved, so to speak. Right now, it feels like it's not contained, and people are understandably nervous. Could this get worse? Could it end up affecting people in my hometown? And there's really not too much evidence to support that fear um, currently, but we are the market has moved lower since coronavirus started hitting the headlines, and I think it makes sense to expect it to continue a little while longer until we get some sort of a positive uh, news cycle that this thing is contained. That's a much more reasonable way of looking at what's going on, in my opinion, is that we were due for a correction anyway. I think it had been 70 trading days since the S&P moved more than 1% in either direction, up or down. Now, obviously, the last few months have been good for the market. We were at a record high just a couple of weeks ago. Last year was a phenomenal year in percentage terms. So, yeah, I think it makes perfect sense that institutions and even retail investors are looking to maybe lock in some profits. It's January, so it's a new year. Taking some profits now pushes your tax bill out a full 12 months. So yes, I think it makes perfect sense that this is the excuse investors have been waiting for to take some money off the table. And if we assume that that's what's happening, it's probably not over. It was just one down day yesterday, really. I mean, we're probably not out of the woods, and maybe we'll get a few more scary headlines with coronavirus, and maybe, the travel restrictions start to get amped up over the next week or two, and it wouldn't surprise me if this becomes an actual correction, because right now it's just sort of a dip or a pullback. We're 3% off highs. So yeah, I think more than anything, it is the excuse that the market needed. It's really interesting to consider that energy was the best performer during the SARS outbreak when everything else was down double digits. That would be unheard of today, given how energy has performed the last 4 or 5 years. So I can't think of any really good reason why that would be. Um, 2003 was obviously a different environment. Oil prices were in a different place, and we didn't have the remarkably negative sentiment for energy companies that we have today. It would be really hard to predict that something like that is going to repeat. We also don't know if we're going to have a double-digit correction in the S&P, and if that were to happen, would energy stocks outperform? Who knows? I mean, you could maybe make that argument just on the basis that they've already taken such a beating that maybe there's not that much further that we need to go. Oil prices have already priced in, I think, at least part of the slowdown from coronavirus. So oil prices are down 15% in the last 2 weeks, which there really hasn't been any bearish data to support that move. But what we've seen is this scare, the fear surrounding coronavirus in China, and entire cities are being locked down. Travel restrictions are happening. So people are being forbidden to go to China. People are being forbidden to go from China. Flights are being canceled and that sort of thing. We just don't know. It's so early. I think a lot of people are reacting to headlines, and again, my instinct is that it's going to have less impact than the headlines would have you believe. I don't know that it makes sense to have confidence investing in China or emerging markets. I think, and that's reflected in the allocation decisions that we make. You know, I mean, we do not have a large exposure to China or to emerging markets as a whole. It's a sliver of portfolios that are geared towards long-term growth. And this is the cost of doing business over there. You're going to have this sort of thing. You're going to have political turmoil, and you're going to have, I want to say you're going to have disease outbreaks, but it's much more likely in a system that they've got than it is here in a developed market, a place where we've got much more regulated healthcare and hospital system. So, but it also just so happens that this is going on at a period where we've just had a major rise in technology stocks. You can point to all the usual suspects: Apple, Facebook, Netflix, Amazon. Amazon didn't do quite as well last year, but it's in the same category. The NASDAQ in general was off the charts last year. And now maybe you've got maybe people have been waiting for a signal. When do I take profits? When will I know that it's a good time to take profits? Maybe this is your signal. I mean, we've had a bump in the road this week. And if you're sitting on large gains, it's really prudent, I think, to do some trimming at the very least. And if you're somebody who's been sitting on the sidelines watching these stocks get more and more expensive and you don't own them, and it's killing you to not own them, I don't think we've sold off anywhere near enough to make it an obvious buying entry point. But should this correction continue another couple of weeks, you might have that opportunity to get involved in these names that you've really wanted to own and they've just gotten away from you. What could go right? We get some positive news that's really definitive with regard to this virus, and then maybe we can start getting back into the fundamentals. Maybe there's some positive earnings. I know that we've got Apple reporting this week. That's going to be a big one because they're affected by what's going on in China pretty directly. But also maybe we start getting some data points related to the trade deal and trade between the world's two largest economies. That would be a positive. So I think those are two obvious things that could go right. I don't know that we can count on them to go right in the next days or weeks, but there's certainly a reason to be optimistic for the stock market this year.